Welcome back to Alpha Recap, your fast, smart wrap of the trading day from stockalpha.ai. Markets were closed for the day and we're looking back at what moved stocks and why. As always, if you have questions, you can reach us at stockalpha.ai. Drop us anything you want us to dig into. I'm Jamie, and with me is Jessica to walk us through the moves. Hi, Jessica.
Hi, Jamie. Great to be here.
Let's start with the headline theme. Technology demand and a Davos announcement really set the tone. Big name in semiconductors finished the day up, and an analyst note kept a lofty price target for a big cloud and security firm. Jessica, give us the quick take. What did we see?
Sure. The short version, we saw continued investor appetite for AI infrastructure and ongoing demand for security and cloud services. One of the marquee chip makers finished the day up by about 0.75% to roughly $184.73 on heavy volume, about 138 million shares traded. At the same time, an analyst at TD Cowen held a $265 price target on a major cloud security company, pointing to persistent security demand. Those two items together tell us both short-term liquidity and longer-term demand are still focused on compute and secure cloud services.
Heavy volume is the phrase here. For listeners who don't live and breathe volume, why does that matter? Why does it make this chip maker more interesting than a routine uptick?
Good question. Think of volume as how many people are trading a name. High volume means a lot of hands are moving in and out, which can amplify price moves. When you see heavy volume without any single company headline, it often means traders are positioning on a macro theme, in this case, AI demand. Heavy volume can make a stock more volatile intraday, but it also signals liquidity. It's easier for big investors to buy or sell without moving the price too sharply. So this chipmaker's rise on heavy volume reinforced the AI narrative, even though there wasn't a fresh company announcement.
So traders should watch volume to see whether that momentum sticks. Now about the cloud security company. The analyst kept the price target steady rather than raising it. What's the implication there?
When an analyst reaffirms a high price target, it usually means they still like the long-term story. But they didn't see new evidence to push estimates higher. In plain terms, the analyst thinks demand for security products is steady and could underpin margins, but it's not a fresh buy signal. For investors, it confirms that security product mix could be a margin lever as cloud and AI workloads rise.
Right. Both items point at the same macro engine, compute and security. Let's shift to a Davos headline that feels structural. The partnership between Canius International and the government of Maharashtra. Big words there. Commercialization of mid-TRL deep tech. Explain what mid-TRL means and why this matters for investors.
TRL stands for Technology Readiness Level, a way to describe how close a technology is to real-world use. Mid-TRL covers that prototype to pilot stage, where you've moved past lab research, but you're not yet mass-producing. The announcement at Davos is about setting up a global institute and skilling center to accelerate commercialization in aerospace, space, energy, and other deep tech. For investors, that matters because it can de-risk projects, create local procurement pipelines, and eventually drive orders to contractors, tooling suppliers, and component makers, particularly in India, which is a very large market.
So it's not just a feel-good press release, it could create actual contracts down the line.
Exactly. If the Institute signs memoranda of understanding, funding commitments, or supplier lists, you start to see procurement flow. That's multi-year tailwind for companies that participate in those ecosystems.
Let's move into clean energy. A couple of neat items here. Risen Energy placed third on a top modules list for 2026, and that ties into the Davos Institute, right?
Yes, Risen's Hyper-Ion Pro HJT module, placing third in a respected ranking, is a credibility win. HJT refers to a high-efficiency cell architecture, and module efficiency is becoming a procurement differentiator. Buyers look at life cycle costs and energy yield, not just sticker price. So when a module is recognized for higher efficiency, it can accelerate procurement decisions. Combine that with government-led commercialization hubs, and you get a pipeline where high-efficiency products have an edge in big projects.
In plain terms, better performing panels can win the bids, and the Davos Institute could nurture projects that buy those panels. Who benefits here?
Manufacturers with premium products, system integrators, engineering services, and regional suppliers all could benefit. Conversely, lower efficiency producers might see margin pressure if buyers concentrate on higher performance.
All right, a few regional and consumer stories to cover. Cross Country Mortgage hired a new regional executive in Chicago and says it's the #1 retail mortgage lender for a third straight year. What's the significance?
That's a signal of origination capacity and market share persistence. Hiring a regional EVE for Chicago suggests they're focused on maintaining or growing volume in a key market. If mortgage demand holds, that kind of depth matters for revenue. Investors should look for public metrics later that confirm Chicago hiring translates into measurable origination.
And then we had an interesting noise item, the Jamie Dimon Google search spike. Searches roughly doubled to about 10,000. Should investors be worried?
Search spikes are mostly noise until they're tied to a substantive event, regulatory action, earnings surprises, executive comments, that sort of thing. But banks can move on name-specific headlines, so it's a watch item. If more concrete coverage follows, that's when traders will react.
Let's talk utilities. Centerpoint Energy pre-staged crews ahead of winter weather, about 3,300 electric workers and 700 natural gas workers, and Texas issued a disaster declaration. Why does pre-staging matter for investors?
Pre-staging reduces restoration time and improves customer outcomes, but it increases near-term operating costs because you're mobilizing crews early and incurring overtime or logistics expense. That can compress margins in the short term. Also, outage counts and any regulatory filings on cost recovery after the storm are important. Utilities often seek to recoup extraordinary costs through regulatory mechanisms.
So investors should watch outage data and regulatory commentary. Moving on to consumer and local events. Seagree Indian BBQ signed a franchise agreement for a first New York City location in Brooklyn, and a stylist named Marcus Blassingame became an ambassador for a prostate cancer charity. Small but meaningful for brand play.
Yes, the Seagree franchise is an early growth signal, relevant for private investors, landlords, and franchising players once it converts to open stores and revenue. The ambassador appointment is more of an ESG and reputation move, which can matter for consumer names sensitive to brand and social initiatives. These are not big public company events yet, but they're the kind of tidbits that add up for brand perception.
We also had a regional political risk story, an economic strike threat in Minnesota over immigration agent deployments. Organizers talked about an economic strike, but the timeline and scope were unclear. How should investors think about that?
Local political actions can produce measurable revenue dents for regionally exposed retailers, restaurants, and service providers. Names mentioned as examples included Target, 3M, and U.S. Bank. The scale matters. A one-day event will have minor effects. Multi-day or broad participation can hit sales and local foot traffic. For now, it's a watch item. Investors should look for actual strike dates and turnout figures or corporate sales misses in the region.
Great, let's pull these threads together. What are the emerging patterns you see across today's headlines?
A few connected themes stood out. First, secular tech demand remains intact. Heavy volume in the chip name and a reaffirmation on the cloud security firm point to persistent demand across compute, networking, and security. Second, public-private partnerships are accelerating commercialization pipelines. The Davos and Maharashtra initiative is a classic example of governments helping de-risk mid-TRL projects and creating procurement pathways. Third, efficiency and product differentiation in clean energy are more important than ever. Recognition of a premium module can shift procurement behavior. Fourth, local political actions show how regional events can have real economic impact for certain public companies. And finally, operational readiness, like utilities pre-staging crews, is a visible risk factor because it affects short-term costs and regulatory exposure.
If you had to give traders and strategic investors separate checks, what would you say each group should be watching tomorrow?
For traders, watch liquidity and event follow-through. Specifically, see whether the heavy volume in the chip name holds or fades. Sustained heavy volume with price follow-through would be bullish. While a pullback on lighter volume looks like consolidation. Also watch any analyst notes or company commentary from the cloud security firm about bookings or product mix. For strategic investors, monitor procurement pipelines tied to the Davos Institute. Look for memoranda of understanding, partner lists, or funding commitments, and keep an eye on sales announcements from the solar module maker or distributor, wins that convert credibility into bookings.
Any must-watch operational items?
Yes, CenterPoint's outage counts and any early regulatory comments on cost recovery after the storm. Also, cross-country mortgages regional origination updates to see if the Chicago hire translates into measurable volume. And for the Minnesota story, any concrete strike dates or corporate sales misses in the region.
Let's do a quick rapid-fire watch list, short and punchy for listeners who want a checklist.
Okay. 1. Watch the chipmaker's price action and volume. 2. Any further analyst notes or company commentary from the cloud security firm on security bookings and margins. 3. Look for partner MOUs or supplier lists from the Kanias Maharashtra initiative. 4. Sales, distributor wins, or major purchase orders for the awarded solar module. 5. Storm impact data and regulatory remarks from CenterPoint. 6. Regional origination metrics from cross-country mortgage. 7. Announcements on any Minnesota strike dates or turnout figures and corresponding regional sales misses. 8. Any follow-up coverage explaining the executive search spike. That could create bank name volatility. 9. Franchise opening dates and disclosure documents for the Seagree deal.
Perfect. Before we wrap, a few quick clarifying points for listeners. When you hear us say heavy volume or high efficiency, that's relative to historical trading levels or competing products, right?
Yes. Heavy volume means materially above a stock's normal daily trading. High efficiency for modules means higher energy yield per panel compared with typical designs, which matters because it affects the return on investment for projects.
And when we talk about mid-TRL commercialization, we mean that prototype to pilot zone where technologies are tested in real settings before mass production.
Exactly. That's the point where public support to de-risk projects can meaningfully accelerate commercial adoption.
All right, Jessica, final quick takeaways for a listener who's short on time. 3 things to remember from today.
1. Tech demand remained the central theme. Heavy volume in the chip maker and reaffirmation on the cloud security firm both point to persistent AI and security demand. 2. Public-private partnerships like the Davos Institute are structural. They can create procurement pipelines that matter to contractors and suppliers over the next several years. 3. Watch operational and local risks. Utilities pre-staging and regional political actions can create short-term cost or revenue shocks, so don't ignore the local detail.
Great, that's a tidy summary. Thanks, Jessica. Always appreciate the calm, clear unpacking.
My pleasure, Jamie.
That's it for today's Alpha Recap. If you want us to dig into any of the items we discussed, whether it's the Davos partnership, the solar module rankings, or the utility outage data, head to stockalpha.ai and ask us directly. We'll answer live. For more market analysis and ongoing insights, visit stockalpha.ai. Thanks for listening, and we'll see you next time.